Hey guys, Frank Curzio here with another live video, and it's titled Why Most Investors Get Inflation Wrong. I'm saying this because I used to get inflation wrong a long time ago. When we look at inflation, we all look at the prices we personally pay. And if you look on every single level, food, electricity, you can go lumber, cotton, cocoa, sugar, all these prices are high, tuition. And now that they're going to cancel football, which is going to result, college football is going to result, oh, good luck. Tuition is going to go up tremendously because Power 5 schools are going to lose $65 million each, those Power 65 schools, which is insane. But anyway, tuition, you've seen all these costs go up, and everyone says inflation's going through the roof. And they use that analogy to filter down to their investment decisions as investors. The biggest mistake I've made, which I haven't made at least in the last 10 years, to get a good understanding of this since the credit crisis, is it doesn't matter what you think of inflation, doesn't matter what I think of inflation. What matters is how the Fed judges inflation, because that's how they're going to dictate their policy. And I want to show you something, because this is what the Fed looks at. Okay, they look at the CPI, and they also look at something called, more specifically, the PCE price index, which is personal consumption expenditures. That measures personal spending, and also that adds into a layer of business surveys, which gives you a more accurate reading on inflation. So this is what the Fed looks at. Okay, so what the Fed's looking at, I want to bring this up and show you this really quick and see if I can bring this down. Because when you're looking right here at this level, okay, it's almost at its lowest level ever, right? So you're looking at how low the PC price index is, right? So the Fed's target, we all know 2% here, right? This is where it is at 2%. This is where it is here. Okay, this is the gauge that the Fed looks at. So no matter what you think, what you care about, the prices or whatever, again, you can hold up a sign, you can yell, you can write 25 books in a row like we know some guys have done, saying hyperinflation, the market's going to crash. What the Fed looks at is the PCE, which is the only thing you should care about an investor. So what does this mean? It means that as long as they do not see inflation in this index, it means that's pedal to the metal. It means they're going to continue to flood the market with money, especially during these COVID times. And I know people saw the market sell off today and they're worried, oh, is this a trend? Well, maybe it'll happen for a week. Maybe we'll go down 5-7%, but it'll be immediately, the immediate response will be to buy the dip, just like it's been since the credit crisis over the past 10 years, because the Fed is going to be there. They're going to continue to flood the markets. They don't want to let the market go down. Again, you could hate that policy. You could hate whatever you want, but this is how the Fed looks at it. If you want to be a better investor, take your emotions out of it, focus on what the Fed's doing, get ahead of it, start buying assets, and I'd use this pullback to start picking away at some of the names that you missed on the way up. I'm Frank Curzio. As always, I'll be back to you guys soon. Take care.